Hi everyone, welcome back to Corporate Decoder. Today we are diving into the financial report of Everflow Eastern Partners. And let me tell you, it's a bit like exploring an old oil well. You might find some hidden treasure or just a whole lot of nothing. We are talking about their annual 10K report. We'll unpack the key numbers, see where their money is going, and decide if this company is striking oil or running on empty. Everflow Eastern Partners is in the business of oil and gas acquisition, exploration, development, and production. They mostly work in the Appalachian Basin region, which is in Ohio and Pennsylvania. Basically, they find oil and gas, drill for it, and then sell it. They've been around since the early 1990s, so they're not exactly a new player. Now, a quick note before we dive into the numbers. This company is considered a smaller reporting company, meaning they don't have to give as much detail as the big guys. Alright, let's get to the juicy stuff. The financial situation at the end of 2024 compared to the end of 2023. Their working capital, that's like the money they have on hand to pay the bills, is around $34.90 million. Have on hand to pay the bills is around $34.90 a year. Now, the value of their property and equipment after taking into account wear and tear, that includes their oil and gas wells, is about $6.1 million. It was a bit higher last year. They have long-term liabilities, primarily asset retirement obligations, IR, of about $20.9 million. Think of this as the cost of cleaning up the oil and gas wells when they are done with them. Let's talk about how much money they are making or not making. In 2024, their total revenue was about $5 million. In 2023, it was about $5.9 million. This means their revenue decreased by 17%, a pretty big drop. Crude oil and natural gas sales accounted for most of their revenue, but sales decreased by $932,000 or 17% from 2023 to 2024. This decrease is due primarily to lower average natural gas and crude oil prices received and less natural gas and crude oil volumes produced during 2024 as compared to 2023. A non-cash expense called depreciation, depletion, and amortization represents wear and tear of equipment. This decreased significantly, a big change that influenced overall profitability. Investment income is up. This is primarily due to higher average investment balances held and higher dividend rates yielded on investments during 2024. The company reported a net income, which is a profit of $226,000 in 2022,000. So overall, they barely made any money, if any. Looking at the cash flow statement, we can see where the cash came from and where it went. Their cash flow from operations, which is the cash they generated from their business activities, was $2.1 million. Last cash flowing in this year. The company spent a bit of money buying investments and more on that than the prior period. They also used cash to pay distributions to their partners, $963,000 to UNI holders in 2024. They used cash in 2024 to repurchase units and decrease the number of outstanding units. Let's take a look at what the auditor said. The auditor of the company, Maloney and Novotny, gave the company a clean opinion stating that their financial statements are presented fairly. However, they did point out a critical audit matter. This has to do with the accounting for the asset retirement obligations, or ARO. They noted the estimation of the ARO requires significant judgment. That's why it was classified as an audit risk. The company provides additional unaudited data, such as discounted future net cash flows. This metric is not representative of the fair market value of their oil and gas reserves. Interestingly, the company has not participated in the drilling of any wells since the end of last year. The company acknowledges reliance on hydraulic fracturing for production. They also mention potential risks regarding groundwater quality and legislative efforts. Now, what is the overall situation at this business? Well, the past year for Everflow Eastern Partners was a bit of a mixed bag. Revenue was down and profits were barely there. It looks like the market price of natural gas hurt their bottom line. Their data security measures are so far preventing any attack. However, the company warns about future attacks. Looking ahead, I would say that it is crucial for Everflow to manage its costs very carefully, so that even if their revenue decreases, they can weather the storm. They also need to improve operation and efficiency, so they do not need to reduce their drilling operations. It's a complex situation, but with solid management, they could definitely turn things around. Thanks for watching. If you found this corporate decoding useful, be sure to like, subscribe, and leave a comment below. Let me know what company you'd like me to investigate next.